Hello students and welcome to the lecture. So students, as we know that we are covering the financial system and basically what we are doing, we are covering the stock market indexes, right? And you can say that these are the topics we have scheduled for the discussion. Like we will start with the introduction part, then we will see the historical overview, then the detailed history, types of indexes, formation of indexes, weighting method, and the conclusion. Okay, so you can say that these are the topics we have scheduled for the discussion. Out of these, basically, we have finished with the introduction part. Okay, we were discussing the historical overview in the previous lecture. Then the topics we are totally left with, or you can say we haven't even started, are the detailed history, types of indexes, formation of indexes, weighting method, and the conclusion. Okay, so these are the things which we you can say left with. All right. So I hope that you have revised the previous lectures in the well enough manner before you have come for this lecture, as so many times I have reminded you that it is for your own benefit. Okay, so with this note, let's start. So basically, we were discussing the historical overview in the previous lecture, and we had seen that the Indian stock market marks a remarkable journey in the country's financial development. It's basically started into the 18th century when the East India Company, which belongs to the Britishers, okay, that was the company or the organization which had issued the bonds and shares for the first time. Thereafter, what we have seen the former stock exchanges, including the iconic Bombay Stock Exchange, was established in the 19th century and basically in the 1875. All right, we have discussed about the founder whose name was Premchand Roychand. Okay, he was the founder of the Bombay Stock Exchange, famously known as the Dalal Street. Okay, thereafter, if we go forward, then we will see that late 20th century brought transformative changes with the inception of the National Stock Exchange (NSE) in 1992, which introduced electronic trading and enhanced transparency. Key indexes like the BSE Sensex and the Nifty 50 were introduced as a vital benchmark for monitoring market performance. Okay, so we had seen in the previous lectures also that in India there are two major stock exchanges, BSE and the NSE, right? NSE was established in 1992 and BSE we know was established in 1875, right? So basically what was the significance brought to the market by the establishment of the NSE is that NSE basically you can say brought the concept of electronic trading and enhanced transparency. Okay, so what is the meaning of this electronic trading, transparency, how these things done? So basically when we talk about the NSE and the BSE, the BSE is based on traditional offline approach on papers. All right, traditional offline approach on papers. It means that BSE includes the paperwork more than the digital work. Whereas when we talk about the NSE, okay, so NSE brought modern approach in which paper dependency reduced and vital focus is on digitalization. Okay, so that is the difference. Like when you go to the BSc, then you have to do some paperwork for buying and purchasing of the shares and all the things. But on the NSE, you could do it on the digital platform. It means that the approach of NSE became wider to people. Why? Because in the concept of the BSc, when you have to do everything on the paper, it means that you have to visit the BSc physically. But in the case of NSE, you could be sit anywhere in India and you could utilize your internet, you could utilize your digital services, and then you could access the NSE. This is the first thing which we have seen here. Okay. Second point which was there is known as the transparency. Like, what is the meaning of this? So basically you could say that in the BSc, when the things are on the paper, it means that things or statements or numbers could be, or you can say could easily be manipulated. Okay, things or statements or numbers could easily be manipulated because these are on paper, right? Like if we take the example of your childhood, if you have done this, then it's okay. If you haven't done this, then you must have been trying. Okay, like suppose in a school examination, you only get 10 after two numbers. Okay, but then what you did, you override the number and make it 8. Okay, this is the very you can say the basic things in the childhood most of the student do. Okay, even I had did it sometime. All right, so this is the thing. The same thing could be happen on the shares also. Like when we talk about the offline share approach and whatever you can say, so they issues the share certificate. So what are the share certificates? Like if we talk about today's term, then in today we have the demat accounts. Okay, we have the demat account. So whatsoever shares you have purchased from market, suppose you have purchased 75 shares, so those 75 shares will be credited to your demat account digitally. All right, but when we talk about the share certificate, okay, so if you have again bought the 75 shares, then 75 shares details will be mentioned on paper certificate and then provide to the shareholder. It means that in the share certificate you will get a paper like this one, okay, and all the share details like how many shares you have purchased, where they belongs to, what is the market price, all the things will be mentioned on this. So this is the thing. So in the share certificate, because you have got the paper, so on paper the things could be changed, but in the demat accounts, because this is done digitally, so you could not easily change it. So that's why the electronic trading system brings the enhanced transparency. And then what we have seen, we have the BSc, Sensex and the Nifty 50. It means that if someone wants to enter into the market, okay, and the person does not have the expertise and time to check out whether the market is growing or going down, okay, so in such a case, the person could easily go to the indexes like BSc, Sensex and the Nifty 50, which aggregates a top 30 companies' performance, in the BSE, top 50 companies' performance in the Nifty 50, so that they could get an idea whether the market is on rise or in decline. The history of stock market or stock exchange in India reveals numerous obstacles and challenges it has faced, like scandals such as the Harshad Mehta scams in the 1990s and the Ketan Parekh scam highlighted the need for the regulatory improvements. The 2008 global financial crisis also had a significant impact. Okay, so here we had find out Harshad Mehta scam, which was highlighted into the 1990s. Okay, thereafter Ketan Parekh scam, and then the 2008 global financial crisis. Okay, so what is the meaning of this? Like, if we first take the look on these two ones, means Harshad Mehta scams and the Ketan Parekh scam, they both forms the domestically events, right? Or you could call them domestic events. Okay, but 2008 global crisis. When we talk about the global crisis, then it is of the international level, right? It is of the international level. So what does it mean? It means that the global enterprise, global, you can say, the things affects the Indian market due to the globalization, and it's include the systems like the FII, okay, foreign direct investment, foreign institutional investment, this kind of things. Okay, so keep this thing in your mind. However, we will discuss the Harshad Mehta scams and the Ketan Parekh scam in the upcoming lecture. Till then, just keep this thing in mind. Despite these challenges, the Indian share market has thrived amid economic reforms. Okay, like the liberalization and the globalization. Liberalization and the globalization. Liberalization means, like, if we talk about India, so after independence, the government had adopted an approach which we call as a semi-communist or you can say socialism approach. Okay, it means that major sectors and companies were put under control of government. All right, and there were restrictions imposed on private players. Okay, so major sectors and the companies were put under the control of the government and there were restrictions imposed on the private players. Okay, after the independence till we reach the new economic policy. Because in new economic policy, major sectors were open for private players and restrictions relaxed. Okay, so that's why the liberalization helped India, okay, Because right now the investors does not have to invest only in the public enterprises but also the private players they could reach. Thereafter the globalization. So what is a globalization? Like you can say that prior to the 1991 or the new economic policy, the government had a policy to maintain least contact with foreign entities in terms of which, in terms of foreign funding. Okay, like you can say that the major portions are owned by the government. Okay, and second, the government has a policy to maintain the least contact with the foreign entities in terms of foreign funding. It means that the players, or you can say the merchants, were not allowed to maintain the funding relations with the foreign entities in the full-fledged manner. Okay, there were so many restrictions. Okay, even on the import of technology and other things. But in the, you can say, the 1991, this is also relaxed, and you can see the private players were getting the permission to participate with the foreign funding. Okay, over the years it has evolved from a small informal marketplace to a sophisticated, well regulated financial ecosystem playing a pivotal role in India's economic development. Like we could say that it was started from the banyan tree at Central Town Hall of Bombay, right? It was all started from banyan tree at Central Town Hall of Bombay. Got it? But thereafter, what we have seen? We have seen today India having the one of the world's largest stock exchange, like the National Stock Exchange, which is known as NSE, and the Bombay Stock Exchange, known as BSE. It means that from banyan trees to this place we have grown to. Okay. After, you can say, taking the historical overview, now the part is detailed history. Like now we have to see the detailed history of the Indian stock market and indexes. First, we will start with the origins. 18th century. The Indian stock market traces its roots back to the late 18th century when the East India Company issued bonds and shares to fund its operation. Initially, securities were informally traded among merchants under the banyan tree. Okay, in Mumbai. Like we could say that the company rule in India began with 1757. Okay, after the Battle of Plassey. Okay, in Bengal. But thereafter, 1764 was the time, and that was a Battle of Buxar, which was again happening to the central India. Okay, and that was the time when the British got the overall control of India from the Mughal Empire. Okay, so what is this? It means that the company had started its formal administration and financial operations, right? And as we know, from 1600 to, what is the significance of this date? Come on, tell me, what is the significance of this date? 1602. What do you mean by this? That was the time when the Amsterdam Stock Exchange was formed. So it means that the Europeans were already practicing the, you can say, the stock exchange market from 1602. Okay, that means that they had the knowledge of the stock market. So when the East India Company after 1764 assumed the, you can say, the throne of the India from the Mughal emperor. Okay, so after this, certain years after, you can say, in the 18th century, the East India Company issued the bonds and shares to the Indian brokers and merchants so that they could arrange the funding. All right. And as we had discussed that the entire thing was informally. Why? Because this was the 1850 when these merchants and the group were met under the banyan tree at Central Hand, Bombay. Got it? So that was the origin. Okay. Now, formalization and expansion. Formal stock exchanges, including the BSE, were established in the 19th century. The Companies Act of 1850 and the concept of limited liability spurred the investors' interest in the corporate securities. Regional stock exchanges were also established in major Indian cities. Now, this is the, you can say, the main thing which we are seeing here is that the BSE and the Companies Act of 1850. Okay. So basically, students, I don't think that it's a time that we should start this because it will take some time to explain you. All right. So what we will do, we will discuss this in the next lecture. Okay. So in this lecture, we have, you can say, covered till here. We have seen some backgrounds. We have seen some, you can say, out of the box things. In the next lecture, we will continue from here. Till then, just revise all the facts and figures we have discussed in this lecture. Okay. Because if you are doing this on the regular basis, then it will be your own benefit. Why? Because the topics, as I have told you, are not the same, but they are interconnected. Okay, not the same, but they are interconnected. Okay, so if you are not revising them in the well enough manner, then what will happen? While you will see the question, then you will get confused. Okay, so to avoid this kind of situation, please make sure that you will revise all the facts and figures on the timely basis. With this note, let's end this lecture, and what we say, thank you.